fundamental value is a phrase that you use in your PowerPoint, actually, and I couldn't. It stuck out to me, and I know you have to throw the word potential in there, but what do you think is missing here in terms of the story? Because you look at the NPV, you look at the ASIC, well, I guess the one big number in there is obviously the CAPEX number. You're going to have to find 850 million bucks to kind of get this thing going here. Have you guys considered starting smaller? Have you guys considered other strategies which don't involve the need to go out and raise so much money for a $140 million company?
Yeah, and listen, we face this a lot on the concept of potential dilution. People talk about it. Listen, our strategy is advancing the value of this project, getting it through real value milestones and taking real risk out of it. And then in 2023, when we are having a discussion about is a single asset company the right one to build an $800 million project on their own, history has shown that to not be an entirely, universally constructive exercise. So at that point, then I think you have a bunch more options, but you should see the value of the project there. If this is one of very few 5 million ounce projects that in good jurisdictions, you get it permitted. There aren't that many projects in the world that can produce 400,000 ounces a year.
Yeah, but therein lies the problem. If you can get it permitted, it's sitting under a lake. Canada is a very good jurisdiction, mostly. But sometimes things take a little bit longer, and I do appreciate the size and scale of the Springpole project that you're talking about. There's so much to like about it. But I say therein lies the problem of this single asset company, which you highlighted, which is if you have to wait around for that thing to be monetized in some way, or give you the bump in the share price, then you could be waiting an unquantifiable period of time. So what are you doing with the other asset, Goldland, for instance? Where's that at?
Yeah, so it's one thing when you look at this portfolio, you can draw a conclusion. This is not a single asset company. We've got a lot of really interesting projects, and in some senses, honestly, probably a few too many for us to spend.
Glad you said it, because I was getting there.
And that's no, exactly. And that's been the other part of the recognition that, as we've been setting capital budgets and priorities, getting our permits for Springpole, and in part of getting permits, it's getting the permission to mine and the social license to mine, and that's really important in us working with our Indigenous communities. And we're in early and active consultation there. So that's an important part of it. But, while that is going through a process, we have a lot of other projects, 5 other projects that we need to help surface value from. And from our perspective, listen, the market is moving. The gold industry is moving to a point where there is going to be a lot of capital needing to find homes to try and build productive capacity. People are going to need projects. We have some. So it's about getting the projects to the position where they are able to attract other capital, or attracting other capital now to get them ready for the time when the industry really
exactly. But the money controls that conversation. So you do have to put as many things in place as possible. You've got your PEA, PFS later this year, and hopefully EIA approvals first quarter next year. I get it. So you're moving that along, like everyone's got to do, right? It's the usual path. It's very clear. But what else are you going to be able to do? So you may have too many projects. I suspect you do. Are you looking to cash some of those in and offload some of them? Are you bringing strategic partners in? How do you bring more cash into the company now over the course of this year to allow you to do the things you're going to need to do to be able to have meaningful conversations with mid-tiers or large caps who are looking at a 5 million ounce scale operation?
Yeah, so I think we're executing on that right now. So we announced an earn-in deal on our Pickle Crow project in January with an Australian company called Ateco, which a lot of people don't appreciate if you haven't actually done the read-through, but it's the same team that was behind Bellevue Gold, which if you look at what they have done with Bellevue, this is the Australian Explorers of the Year last year. And they surfaced value in Bellevue by going into a past producing, high-grade gold camp and applying, good state-of-the-art geoscience to delineate.
It's a great team. But what does that mean for you? What was the deal? Do you get cash
So
up?
so the deal is it's not much cash up front. We'll get a few shares up front, and then they spend $10 million over the next 5 years to earn an 80% interest. We're carried through to a construction decision, which is pretty important in an underground mine where, that delineation of resource towards a mining decision is expensive. But what that project needed was, a focused team and probably $10 million to really outline the opportunity. The look-through value on that for us, if they have even a portion of the success that they had at Bellevue, which is now sitting at a 350 million Aussie market cap or something like that, we still own 20% of the project. We have 4 million of cash payments that would come in as part of the earn-in deal, and we'd own 10-ish% of the company.
Okay, so that's a kind of medium to longer term play, and assuming they hit all the targets that they need to hit and they can continue to fund this thing, that could be something for the future. What else is happening with any of the other assets like Hope Brook or Cameron, for instance?
Yeah, so we spent after we finished our financing in May of last year, we spent a little bit of time and a little bit of money trying to understand a proper game plan and look at a couple of the key risks on each of those projects, right?
Okay.
And so, as we looked at it, Cameron, I think, is a real sleeper in this portfolio. The reality is it was basically ready for production or ready for a feasibility. They did a feasibility study on it in the 80s, but there's a 240-meter ramp down. It's been developed into ore on 3 levels. And there's about a 30,000-ton bulk sample sitting on surface, like at the project right now. And it disappointed when they bulk sampled it on grade. So they thought they were going to get 5. They got kind of 3.5 grams. Mm-hmm. And it has never been identified as big enough to support its own mill. But what's happened from the 1980s to today is, someone's built a 25,000 ton per day mill 88 kilometers away. So we're thinking a little bit creatively about how that project could be moved forward. And at Hope Brook, similar, there's kind of 1 or 2 really interesting things that you need to understand about, potentially, could you be, starting, moving some waste rock and selling it as aggregate, for example, which some of the producers in northern Newfoundland are doing. You're right on Tidewater. You've got a power line right to site that's still energized. You've got, not ship loading facilities, but you've got a roll-on, roll-off barge facility that's still in great shape. And there's a almost 1 million ounce resource there. So it's kind of getting just enough information that you can understand what's a right way to put it forward, whether it's us or other people.
Right. Okay.
But we haven't been in an environment where you can sell these projects for cash, right? That environment, I think, is coming. So in order to get them ready for that, it's about finding partners who can help you move them to the position where they're then in the right state that you can maximize the value.